The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 6th, terrific Thursday edition of the Money Masters Show. Thanks for joining me. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. These are the beliefs brought to us by our man in the chair, Alberto, in the production room. He makes things seem so easy out here. And these are the words of wisdom, and it goes like this. It says, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And watch your character, for it becomes your destiny. Folks, let's go check out the destiny of the markets right now. We've got the Dow trading up 72 points. It is trading at 16,432. S&P is up 6 points. You got the Dow is leading the charge. The upside up 0.4% right now. S&P I take that back. You got the New York Stock Exchange. Now that's big. The New York Stock Exchange is actually what is leading the market up. It's up 0.5% here this morning. So that is trading out at 10,536, up 54 points. Then you've got the Dow. Then the S&P, which is up 6 points, is trading out at 1881, basically 1880.52. You got laggard, then you got the NASDAQ Composite. It's trading up 0.25%. It's up 9 points. And then the NASDAQ 100, that's struggling. We'll take a look, see what's pulling the NASDAQ 100 down. It's up only about 0.1%, up 5. Same thing in the Russell 2000, up $1.40, up about 0.1%. Of course, Russell 2000 had such a big day a couple days ago. It deserves a little bit of a rest out there. Our call number is 877-927-6648. If you give me a call, would be happy to take a look at your stock chart, answer any question I possibly can. Lead the charge to the upside. Back in the game here today is Biogen, BIIB, up 3%, up 11 bucks. Aegis Pharmaceuticals, that's up 26 points. AGIO is the ticker symbol. You got Chipotle, got a little fire, got a little jalapeno going here. CMG, it's up $9 this morning. Baidu up $7 and change. Karyopharma, CPTI, that's up 15%, up $5 and change. Regeneron Pharmaceuticals, that's up $5. Kihu 360 Technology, that's up $4.60. Receptos RCPT up 8%. Cenacorp up 6%, up $4. Google's up about 3. To the downside, leading the charge. Copa Holdings down 9%, off $12. Down 5, you've got Children's Place retail stores. They're down 10%. Bitauto Holdings, BITA, down 9%, off $4. Costco off $3.50. Green Mountain Coffee Roaster down $3. Wuxi Pharmaceuticals off $3. Lumber Liquidators down 3. Again, our call number 877-927-6648. Let's begin the day. Let's go take a look at the New York Stock Exchange. Let's go see what it is doing. Key here on the New York Stock Exchange. Let me see what kind of retracement, or what kind of expansion, I should say. My apology there. Let's see what kind of expansion we just hit, if any. We're going to go from the highs out here on December 31st. 10,406.77. We're going to use expansions because it's a great gauge to measure where the New York Stock Exchange is probably headed to. So it looks like the number it wants to run into is 10,587 or 10,536 right now. If we take a look, or I'm going to go take a look at net advancing issues versus declining issues, see what we have going on out here. Now that's interesting. So you got the New York Stock Exchange lead the charge percentage-wise, and we only have 718 net advancing issues out there. You would expect to see larger market breadth behind this move out there. That is always something that's got to make you say, something to think about. Nonetheless, price, though, looks like it wants to try to get up to the 10,587 level. That is the expansion of our last set of swing points inside of the New York Stock Exchange. Let's go take a look at the Dow. We got the Dow is just behind them from a percentage standpoint to the upside, and see what it is doing. The Dow here, now see if it's finally trading back into its December 31st swing point. Oh, it has. It's finally hit that. Now, I think it has. The low is, let's make sure, 16,446. 16,446, and we've gotten to 16,446. Okay, now I got to go to the cents. So we've been up to 16,446.71 versus a low of 68. Okay, so the Dow has touched the bottom of the December 31st swing point by 3 cents out there. So that is important because why is that important? Well, it's important to see where it ends up trading today, because now what the Dow has done is it's tagged that swing point. And in this case here, if it was to close lower on lighter volume, that would be a failure at a swing point out there. But you got to take it, like the Dow's only 30 stocks. We got to see what's going on in the rest of the market out here. Likewise, if the Dow closes inside today, 16,446.68, that would be bullish from the standpoint that it should then go up and at least test the high, the swing point high from December 31st, 16,588.25. So that's what we have going on inside of the Dow. Let's go take a look at the S&P 500. No, we haven't done that, so let's go take a look at the S&P 500. I believe that is above the 1.272 of its swing point expansion, that being the swing point high from January 15th down to the low that was put in on February 5th. No, it is just hitting that, looks like hitting that today. 1881.55 is the exact number. What we've seen here is 1881.84. You're trading at 1879.62. So it has made a 1.272 expansion. Does price have to stop there? No, but you want to be paying attention to all of these Fibonacci expansion numbers, especially when we have multiple things that are really hitting at the same time. So that's on the S&P 500. Let's go take a look at the, what do you want to take a look at next? I ought to do this to make it easier for myself. Let's look at the NASDAQ Composite. Composite here, it is up above the 1.272 swing point expansion, and that is the expansion. In fact, this has a consolidation pattern as well that we can take a look at what that suggests as a breakout. The swing point expansion that we're looking at is a January 22nd high, and that is at 42.46.55, down to the low that was put in on February 5th at 39.68.19. So you're above the 1.272 level, which is 43.22. 1.618 expansion is 44.18. So at this stage, that's what it says the NASDAQ Composite wants to do, is make a move up to that level. Now, the two black horizontal lines going across my screen, you could easily make the argument here that beginning on December 18th, you may not remember that day, that was the day that was the going-away party for Uncle Ben Bernanke out here. Market move, at about 2 o'clock, 2:15, big thrust down, and then a big move higher. That set up the Santa Claus rally going all the way into December 31st out here, at least for the Dow, at least for the S&P 500 out here. The NASDAQ Composite went a little bit further. And the top of the consolidation really being the trading session from January 22nd, because we did see a move all the way back down to the lows on February 5th. And we know that it did that with lighter volume. And that set up the potential consolidation move out here. Well, it broke through that, right? It broke through that. We actually broke through that level, came back, and on the one-hit wonder day on Monday, what happened was came back and tested that level. So it tested the actual breakout. So the work to the downside from a testing standpoint for the composite has actually been completed out here. So if this truly is a breakout here, and that would say that our measured move, our measured move, I got a scrunch. That is a technical term for all of you chartists out there. Got to scrunch the chart just to be able to put that out here. And what this would actually say is it would say that the NASDAQ Composite would like to go up to the 45.25 level and make a 2.0 expansion out there. And that's the measured move of the NASDAQ Composite. So that's the message that it's communicating to us on the daily chart. On the monthly chart, we know it's inside the swing point from 2000. Now, maybe you didn't catch us during the last hour, so I'll show you what that looks like. In fact, I'll just do that right here. We'll put up the monthly chart, and the monthly chart shows that we're inside 43.55.69. You're at 43.61 right now. Staying inside that suggests on a monthly basis a run all the way up to the highs at 51.32. So that's on the NASDAQ Composite. Of course, the week ends tomorrow out here. I think there's quite a move. It would take quite a move to get up to the weekly swing point high. Let me just tell you what that number is. I don't think that one is realistic. Of course, it is Jobs Friday, right? First Friday in the month out here. So the weekly swing point number for the NASDAQ Composite is 47. 22, and that would be one heck of a move in the composite. Let's go take a look at, let's continue on, take a look at the indexes out here. Let's see what is next up on our screen. The XAU, let's take a look at the XAU. XAU is trading up towards, has it hit? Yeah, it's trading into its swing point high from February 24th, the low of which is 103.18. It's tested that. You're at 103.07 right now. Looks like the XAU wants to go test that high at 104.34. We take a look at the NDX. Did we do that? No, we did not take a look at the NDX. Let's go take a look at the NDX 100. Let's see what it is doing out here. So this is the struggling index. We're going to go find out why here in just a moment. So it's turned just slightly red. It's down about 88 cents out here. Now, what the NDX 100 has done, you got this bar right here. This is a key reversal session. This is February 28th. This is last Friday. So what it's doing right now, and we'll see if this is going to hold, the top of that candle is perhaps the most important price for the NDX, and that is at 37.22.38. You're trading at 37.25.84. That candle, it's not a bearish engulfing. It's no from a Japanese candlestick standpoint. It's not you would not identify that as a bearish candle. However, it's a key reversal session out there, and those typically are candles that would turn the market down. Now we got that one day wonder on Monday when we saw the market push down out here. Now we're going to see if that as a resistance line, because we have seen the market trade above it yesterday. Now we're going to see if that holds as support. And that'll be very important to just understanding what the message of the markets is. If it does hold the support, meaning we see a low of 37.22.38, what have we seen so far today? 37.25, so we haven't seen a test of that, and you get it closed back above that, there's a rejection of an area that is setting up as potential support inside of the NDX. If we take a look at its expansion patterns out here, if we take a look at the last expansion, meaning from the swing point from January 22nd down to the low on February the 5th, you'll see that the 1.618 expansion is a level of 37.68. So at this stage, with the information that we've got, what the NDX 100 is communicating to me, at least, is that it wants to make an expansion to the 37.68 range. And that test of the candle here from last Friday will be very important to help us confirm that or clear that. Now, the SOX itself here has been an index that has truly been on fire. It right now is trading out at 570.98. It's up above the 1.272. A to B equals CD. It's up above the 1.618 expansion level out here. The SOX actually, even though it's struggling a little bit right now, really says to me it wants to make a move up to about the 583 range. Now, today, we haven't seen that many bearish reversal signals inside of the SOX. We saw one right back here, was a little piercing candle. That was on the trading session of February 21st out here. We saw a little shooting star, maybe two of them put together. That says we've got some, should have pretty decent support at about 566 or so. 877-927-6648. Dow's up 65. S&P is up 4. We'll be right back.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 69 right now. S&P is up 5. So during the last segment, we noted that the NASDAQ 100 was lagging, and so we can take a look here real quickly, and we can see that putting the pain from a points standpoint inside of the NDX 100 Staples. Staples looks like that is dragging the NDX down by about 2 points. Costco by about 1.5 points out there. The text is too small. Sorry, I can't do anything about that, folks. Microsoft is pulling things down just a tad. Green Mountain Coffee. So we'll take a look at Staples, SPLS, and Costco. Let's see. Leave the charts to the upside here with inside the NDX 100. You've got Baidu, Bib, Vodafone, Express Scripts, eBay, and Starbucks leading the charge to the upside. But let's go see what's going on inside of Staples and Costco. STP. Oh, gee, Staples. What is? Let me put that back up there. I think it's SPLS, but I don't want to put up the wrong ticker symbol. Yeah, SPLS is Staples. So let's go put that chart up on my screen. Excuse me while I'm on. There we go. SPLS. So SPLS is the ticker symbol. That's for Staples. Gapping down big time this morning out here. I guess you folks aren't not buying your office supplies at Staples. This thing is getting just hammered. Let's just start with a brand new, clean, fresh chart out here. Now, Staples, what it's doing, it's got this high volume gap down bar, high volume low in essence back in August of 2012. That is what it's trading into. You had volume of 93 million shares back then. It's going to, now it's done a number of things. This is going to be not an exhaustion gap. You see, this is the third gap down here, but it happens to be much smaller than that first sign of institutional selling inside of Staples. That took place on August 21st out there. And, we often talk about how a stock may let you out a couple of different times. Well, Staples is certainly a prime example of how that can happen. Let me just draw the line across the bottom of my screen out here. So Staples, you got institutional selling, right, that takes place for whatever reason on August 21st. How do we know it's institutional selling? Because there's not enough of yous and me's out here to generate 45 million shares off of the highs out here. So not only do you have institutional selling inside of Staples, let me pull this back. No, it's not off of all-time highs or anything, but it's certainly off of a nice move that it Staples has done this several times out here. How about that? In any event, let's just take a look at the most current situation, and that is where we had that gap down in August of 2013. So it makes a move lower, big volume to the downside, and then it just simply scrapes its way all the way back up to where it broke down. And the breakdown in this case here took place at August 20th's low, 1643. The volume on that candle was 10 million shares. Obviously, you're really benchmarking it with 45 million shares. It makes its way up there with 9.5 million shares on the trading session of November the 1st, and then gives it up by moving lower. That acted as a resistance level. That was certainly an opportunity to get out of the equity. It has another gap down with some volume, not as bad as the first time, and it's a much smaller gap out here, both percentage and dollar-wise. That was on the trading session of January 16th out there, 27 million shares to the downside. But today it is gapped down again, big volume behind this move now. Already 30 million shares. We're only an hour into trading. So that says Staples is going to have larger volume today than that big gap from August 21st. That's painful. Let's see here. And it's coming into this area here, that this high volume bar of 93 million shares. It seems like it's more likely going to have something like that. So let's put Staples on a longer-term chart out here and get a feel for where it is headed to, but not a good scene. Okay, so in the case of Staples, must have looked at this before for someone. We can see the actual trend line. That's the red diagonal line on my screen out here. And it's just a trend channel line in this case here, really from the highs back in March of 2010. You can see a decidedly lower trend within inside this. So right now, and this is the weekly chart out here, Staples is going to come all the way back and test the lows of about $10.57. Now, it could take those lows out easily because the volume down there is only about 58 million shares. Let's pull this back even further. Let's go put this on a monthly chart out here. See if we've done any work on the monthly chart. We have not. Let me refresh my screen out here. So in the monthly chart, there we go. So the monthly chart here, if this thing is able to this month take out the lows of 1057, do it with, I don't care what it does on lighter volume or heavy volume. If it does it on heavy volume, meaning more than 347 million shares, that's a real bad scene out there. But that says that the price ought to gravitate down to right about here. September 1996. That's a stinger, isn't it? That price, 527 to 671. I hope none of you are in Staples, at least to the long side. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 79 points. S&P is up 6. Let's go check in on the currency markets out here. We've got big movements inside of currencies. We've got the euro, Japanese yen. We've covered that. We certainly take a look at that on during the first hour. Let's cover that here. That's perhaps the most critical thing for us to look at here, just simply because of the correlation to the U.S. market. Then we'll take a look at the other currency pairs as well. So I'll summarize this as quickly as I possibly can. We've got the euro, Japanese yen breaking out. You can see on the 120-minute chart. So I'm putting on my screen here right now. It's hitting the top of a rising price channel. So far, that has held. We are in a overbought condition. That means that it really needs to work its way off. So we could have seen the highs of the day in the market or somewhere right around here. And it doesn't mean that it can't move higher. That just prices typically contained within inside a price channel here. And that doesn't mean that, okay, you jump on, or my opinion is that doesn't mean you jump on board and go short the market or what have you. You need to look at other elements out here. In any event, this currency pair has truly taken off topside, and since it correlates well to the market, we've been trading for an hour, so I think that the market is now caught up to what's going on inside of the currency level. That's what's going on the 120-minute chart. On the 30-minute chart here, the 30-minute chart right now seems to be supporting potential pullback as well. We just got the first reversal candle, happened to be a bearish engulfing and a key reversal session right here. That's where we saw the high and low of the prior bar exceeded. Again, I wouldn't even short this currency pair here, even knowing that at this stage. I have to go back and take a look at other patterns, but I wouldn't do it, period, because that wide-ranging bar here from 8:30 to 9 o'clock on the 30-minute basis, all this says is we should see this currency pair start to pull back and retrace a bit out here. That's what's going on that time frame. On a daily chart, the daily chart right now says we have a nice breakout that is underway with regard to this currency pair, and that it wants to trade up to. It's probably made the 0.618 retracement. Let me just go measure that. That retracement from the high of December 27th down to the low here on February 4th. Now it's actually even above the 0.618. So it came into the 0.618 retracement area here, which was 142.06, wide-ranging bar. That absolutely screams at you it wants higher price, which is the 0.786 level. And that's up at this 143.73. But, folks, if it hits that with a wide-ranging bar, then all bets are off. It's not going to make that pattern out there. And that would be the first time where I'd say you could start to take a look at a short in the marketplace, as if we start to see this currency pair reverse, and depending on how that actually looks and what that candle really, or candle sessions actually look like at that stage out here. Because remember, in a Gartley pattern, you have 5 outcomes, and one of those outcomes is just simply a retracement to your 0.382 or 618 or 0.786 levels out there. In this case here, so that's what's going on the daily basis. Now I'm going to flip back into the currency section, because that brings me into the weekly chart. We've got the week ending here tomorrow, and this chart here bodes perhaps the best for a long-term breakout here from a bullish standpoint, and that is that the Euro-Japanese yen is well above resistance, which it has tested, which takes you back into the 2009 time frame here, and that's the 2009 time frame where you can see this red line going across my screen out here. You can use that. You can move that line up and down. I'm using the bodies, really, of the candles, since they truly are the essence of price out here. And price got above that consolidation level, got above that resistance area, came back, tested it, and it has rejected it. Now, if in fact we see a move, so that means if we see wider ranging bars coming into that daily chart, into that 0.786 area, what that really says is going to go test those highs, and the high being December 27th, as we know. And if it takes that level out, 145.67 out there, it will be off to the races. It's just the way that this currency pair just simply works. Now, if we take a look at the euro, U.S. dollar, that's got some big movement, and that's right now, what's going to truly, that may need to, you got the Japanese yen as a denominator. You've got the euro, though. If we take a look at the euro, take a look at this. Here is a daily chart. So what it's doing, it's also running into resistance. So the move that we've seen behind the U.S., between the euro yen, okay, as a result of the move that we have seen here inside of the euro. Well, it's primarily the euro, because the Japanese yen has not really moved that much here this morning. But it is the euro. So now just kind of complementing, as we took a look at the euro-Japanese yen and said, hey, that's run into a resistance area on the 120-minute chart. 30-minute chart's giving us a little bit of a reversal signal out here. On a daily chart, the euro-U.S. dollar is running into resistance of a long-term trend line. That's the trend line. Takes you back to the 2008 time frame. Now, today doesn't mean that price has to stop here. Let me just see what the relative strength is on this. It's not overbought, so it can clearly run higher if it wants to. Now, running higher and breaking that would be a potential breakout. That'd be the first potential breakout that we've seen since since the trend line began back in 2008. Now, if it were to break out above that level, come back and test it. This is a daily chart that we're looking at. That would be an indication that this could be a real break inside of the euro. That would say the euro is going to get higher, the move higher, the U.S. dollar index, because of the 53, 4, 5, 6, 7% weighting structure inside the U.S. dollar index, would actually move lower out there. That means instead of it cost us having to pony up $1.38 for a euro, we'd have to pony up a little bit more for a euro. Now, on a weekly basis here, and so that's why we'll pay attention to what's going on come tomorrow. This weekly area here has been tagged several times. It was tagged last week. It was tagged the week of December 27th when the markets made their highs out here. So a break above this level would be extremely bullish for the euro U.S. dollar. You say, hey, Steve, where would it actually move to if we were to break out? Well, I would say your breakout would occur up towards the, I would say it would take you up towards the top of the rising price channel. It's been traveling in a rising price channel. That's the euro, that is, coming off of the lows back here in July of 2012. So one thing at a time. On the weekly chart, it's up against some strong horizontal resistance. It's up against the diagonal resistance out there, and tomorrow will be a telling day inside of that currency pair. Let's go see what we have going on inside of the, I mentioned the U.S. dollar, Japanese yen. Let's see what kind of movement we have here. A little bit more movement than maybe I suggested earlier. This does have a, so this here looks like this did form the buy pattern. This pattern here drawn it a while back, I can see. So let's go update the chart out here and see if this made a 0.618 retracement. No, made a 55% retracement. Still more so, I'd say traveling sideways to consolidated, but, on the daily chart out here, today you're actually confirming an A to B equals CD to the upside. The swing point on this would be February 21st out here. So let's go check out that pattern. Maybe that is setting up a new Gartley pattern out here. So there you can see your 1-to-1, and the way that we're coming in off of that, coming off of the March 4th area, says higher price out here. So depending on how you're trading this, if you are trading this currency pair, to me this says that the U.S. dollar Japanese yen wants to get to higher than 103.25 out here, more likely 103.81 would be the level. Now let's take a look at retracements from high, meaning January 2nd, down to the low of this currency pair on February 4th. And yeah, right around the 103.81, it's really 103.64, happens to be your 0.618 retracement level. So that would be the first kind of target area. But, boy, things really have to move sideways here for a bit with inside that currency pair. Let's take a look at the Great British Pound U.S. dollar, see what it is doing. Great British Pound U.S. dollar just simply not backing off. Looking a lot like silver from the standpoint that it made a nice move up. In this case here, it made a nice move up off of the February 5th level. Made a high out here on the daily chart in February 17th, getting out to 168.21 out there. And the retracement thus far has only been a dead cat bounce of 0.382 retracement. That's very bullish on the daily chart for the, even though it's made this very bearish pattern out here. Here's a 3 drive to a top pattern. Here is a 5-wave reversal pattern out here. You did not get a bearish reversal signal which took place on the trading session of February 17th out there. Nonetheless, if you take out this pattern, meaning moving higher at 168.21, that's very bullish. Now, I expect that that's what we're going to see out here inside of the Great British Pound. And the reason is, if we switch over to the weekly chart, it's because it's broken through a long-term consolidation pattern out here. And this was a consolidation pattern that takes you back into the time frame of 2010, January 2010. So it's broken above those levels out here. And that says that over time we should see the Great British Pound somewhere around the 180-ish range out here. Now, it's got some more overhead resistance that it has to clear. It's got some clouds, some bad turbulence, probably at about the price level of 170. But with this consolidation the way that it is, it should be able to break through there. Let's go to John in Concord, New Hampshire. John, thanks for calling. Thanks for holding. How are you doing today?
I'm very well.
Excellent. Glad to hear that. And you'd like to take a look at eBay. Certainly, they've been in the news quite a bit, getting a lot of great marketing between Icon and the CEO out there. What's your take on eBay and PayPal, if anything at all?
Well, if Mr. Troublemaker is going to make something happen, and I had been watching it and kind of looking for a buy point, and now, of course, it's getting in the news every day, but I'm curious what your read was.
Yeah, sure. So you're not in the trade or anything. You're just kind of, hey, what's going on? What do we see out here?
Yeah, I would put in a kind of a buy if I thought there was a price point that you looked at. I'm not going to chase it the way it's going right now, though.
Yeah, no. Good. So let's take a look at the pattern here. Let's actually take a look, John, at a weekly pattern out here with inside of eBay. Nice move. It's at looks like all-time highs. Well, it's in fact, it is, son of a gun. So eBay here had a high. So on the weekly chart out here, let me put that across the screen. This thing made a high back in 2004 Looks like that high was 59.21. Took place December 31st, 2004. So 59.21, you're at 59.59. Now that alone is bullish. There were 61 million shares that traded back then. Last week it came into it with 85 million shares. Boy, that's pretty solid. This week it's already done 30 million shares. Now it looks like this week is going to be a little bit light out here. But what I've also noticed chart pattern-wise, so it would be bullish if it closes above that level, John. That's the first thing I would take a look at. I would also say that eBay, from a sideways consolidation move, it's really been consolidating right here through this time period. Probably can take this back just a little bit further. And it's been consolidating. Let me try to do that here. It's really been consolidating since it had a little breakout, a little gap up that took place on November of 2012. I don't recall when they bought PayPal. Do you recall? Do you know when that might have been around the time period?
I think it was before that, but I don't know.
It was. Okay. We might be able to see it on a daily chart. Nonetheless, this has really been consolidating sideways. I would have to say from the low of this hammer candle that it formed out here at $48.06, that's on a weekly chart at the bottom of the consolidation. Quite frankly, wish I had seen that myself, because that's really the type of what you like to see at the bottom of a support level. And, it's kind of a long-term consolidation pattern. That's what got down to $48.06. So this is going to have really good support at $48.06, or should. So from $48 to about the level of called $58, so we've got a 10-point move. This is suggesting to us that it wants to get to the $69 level. It's trading at $59, so it looks like it's got about 10 points in it. If you were going to trade this, let's say, what you'd want to see it do is you'd want to see it hold the top of that consolidation box. So if we were to get back inside it, and let's just use, and we're using a weekly chart here, I would say if it gets back inside the 57 mark, then maybe the trade wouldn't be there. If someone were going to try to chase something like this, you'd want to make sure the market is continuing to break out as well, I suppose. It's nice to have the market going in the same direction as your long trades out here. But right now, if irrespective, I don't know if that's a word out there. I think irrespective is a word. Irregardless is not a word. So irrespective of Carl, this looks like this wants to move up to about $69 out there, at least on the weekly chart, on the using the consolidation as a pattern out there. If you were looking to come in and buy it, it would be a test of probably the 57-ish area, 57.50, and holding that and pulling back on some light volume. So let's see what a daily chart here for this would show us. The swing point high that you would probably benchmark would be April 11th. That's 58.04, and that's 7 million shares. When it came back and tested that recently, it was 10 million shares back on March the 3rd. But that would be a spot where you could take a look at it. Coming back to 58.04, testing it with less than 7 million shares, and then moving out from there. Let's see, what is the danger sign on here? If this thing falls for some reason, it should find some support at about 55.90. So that's like about a $2 stop to maybe make $10 or so. So that's probably where you need to look at from a stop standpoint.
Okay, thank you. And looking at what you're presenting on Tiger TV now, there's that big volume day. How do you read that big volume day?
It was pushing higher with volume, no question about it. Yeah, it was pushing. It was pushing. So it made a high. I don't really pay attention to the color of the candle, because that could throw somebody off. Somebody could look at that and say, "Oh, that must be bearish." No, it just means where it opened and where it closed. What it was really doing when it was moving up there, it was taking on a swing point that only had 13 million shares. It was doing it with 61 million shares, and it was taking on a swing point that only had 13 million shares back on September 26. You're welcome to hold if you'd like.
I got another question for you.
Okay, we're going to go back to John in Concord, New Hampshire. Right now, the Dow's up 78. S&P is up 6. Russell 2000 struggling a bit, but it deserves a break today. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 84, S&P up 7. We're on the line with John from Concord, New Hampshire. We're taking a look at eBay. John, during the break, I went back and took a look at the daily chart, and I would wager that it was on April 19th or April 18th when eBay went ahead and bought PayPal, because that's where we saw the big volume spike, 60 million shares. The thing gapped up, and that's a gap that never ever has to be filled, in my opinion, because it really did mark a change in in structure of the company. In essence, they went from the bid site to truly being a finance company, which is why Carl wants them to break them apart again, I guess. But so you had another question. So you were asking the one question: what do I think about that high volume bar or spike that we saw on January 23rd. And for me, it was pushing higher into swing points with volume, said that you would see price back up there again.
Well, quite often, Tom, when referring to a stock, we'll focus on a high volume bar when it's sticking out like a skyscraper, and I've tried to get to understand exactly why he's using that as such a benchmark. And is that at a low or a high? Just for a second.
The ones that both, but the ones that really stick out at first are going to be the high volume bars at lows out there. And those are going to stick out because that's where you've got a natural place of a fund or funds that are going to support an equity or an ETF or whatever position it is that they might be in there. And if the high volume low takes place and is not tested, and by truly being tested, meaning the bottom of the of that price of that bar, it says if it ever falls out of bed again, that's likely where price is going to run to. Likewise, if you see a high volume high, it says that price, usually markets don't end on high volume highs. And so as you're scanning, looking through stock charts, you would like to be able to find something that's got a high volume daily bar, a high volume weekly, a high volume monthly, all put together out there, and also something that has not been tested. Because if it hasn't been tested, it says that eventually price should travel up to that area as well. You like to take a look at volume as it's moving into swing points. You know, it's really a supply and demand element. It's telling you if you're moving into an area that it's trying to overtake, it's like an army, that's marching towards you. So instead of it being, 10 million soldiers, it's 30 million soldiers is one way just for me to kind of give you an analysis of it. Likewise, when you start to see, shareholders, so the most fundamental aspect of any stock chart is going to be its price and volume. So that I would have to say is the most fun. What are the shareholders doing? With price. Forget about what the CEO is saying. It's what are the shareholders doing? And by shareholders, a lot of times from those volume bars, it's what are the large funds doing? When you have volume up at the highs and it's light volume like we have here, you're really running the risk of that being just distribution. Lows are made through accumulation where you have light volume. Highs are made through distribution with light volume. It's why what the interesting pattern inside of the Qs is so important to be paying attention to, and why the NDX is actually struggling here right now, and why we should all be paying attention to it is because if you take a look at the Qs, yesterday was one of the lightest volume days that it had, and the Qs here, for whatever reason, maybe because it's been such a leader out there, when it makes light volume highs out here, it typically marks at least short-term tops. And yesterday was 27 million shares. The day before was with 33 million shares. So far today, it's traded with 7.5 million shares. I don't know what it's going to end up with at the end of the day, but that's both distribution at highs as well as something that forms tops. Gee, sorry to have elaborated so much. I didn't let you get a word in edgewise.
I appreciate listening to you. Thank you very much.
You bet. Have a great day. Thanks so much for calling. Stay tuned, folks. Our man Basil Chapman is up next. We got Larry Pesavento, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Have a great Thursday, folks. Look forward to seeing you in the morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.